SoFi CEO Anthony Noto joins us now. Anthony, good morning.
Good morning. Thanks for having me.
Great to have you. So we've been hearing on earnings from the major banks. You guys, of course, are more of a challenger, but we've been hearing from them that trading volume has been up, and that's been big for them. Have you been seeing the same thing? And what's the broader impact on SoFi when you get that kind of activity?
Sure. We have definitely seen a secular acceleration in the activity in SoFi Invest. Our total users have nearly tripled since January. Our daily trading volume's up over 300%. We're seeing many first-time investors. 21% of our investors that we've pulled are investing digitally for the first time during the pandemic. We've made the product more accessible. 35% of our trades are fractional shares. We're the first large broker, large named company to introduce fractional shares over a year and a half ago. It's been an overwhelming success to make investing in names that people like and people buy, like Amazon, like Tesla, that are high dollar denominated stocks available for $1 at a time. We also introduced a product called SoFi Gig Economy ETF. The symbol's GIGE. It's up 36% year to date. The idea here was to give millennials and Gen Z, our target audience, access to a diversified portfolio of new economy companies, of gig economy companies. And so these are all ways we've made investing more accessible for new and novice investors, because for them to get their money right, which we're trying to do, they have to get investing right. So we're seeing really positive trends. As you mentioned, Tesla, I don't have a point of view on whether it's a buy or sell or its valuation, but it's a really popular stock in the portfolios of our members. It's the #1 stock in assets under management on the platform. I would note 88% of the owners hold less than one share, though.
Right. That makes sense because it's expensive at one share, especially right now. So I believe that you said your most favored stocks of the last month are Tesla, as you mentioned, Amazon, Apple, Microsoft, Netflix, Shopify, among some others. Tell me about the behavior on your platform. Are people really investing, especially the first-time investors, or are they trading? Are they just kind of experimenting and getting used to what it means to buy and sell a stock?
Yeah, first and foremost, we have a responsibility to educate them on what the right principles are for investing and to make sure that they're investing based on their knowledge, based on their risk appetite, but also based on just prudent principles. So I'm actually happy to share with you that less than 1% of our accounts on the brokerage platform have more than one trade a day. So we're not seeing day trading types of patterns you would see, and the statistics bear that out. We also have an obligation to educate them if we do see that behavior on the perils of investing in that way as opposed to long term. So we're trying to educate our investors to focus on long term, ensure they're diversified, leveraging dollar cost averaging, not trying to do market timing. And we're seeing those right types of behaviors, and we're not. We provide access to free certified financial planners that they can talk to get advice. But also, it's critically important to give them products that allow them to do that. It's one thing to say, invest in diversified assets, and then the lowest cost 500 share ETF is over $200 or $300, or the stocks that they really like because they're buyers and consumers of the products, like Amazon, are over $2,000. So that's why we introduced fractional shares, but we also introduced ETFs like the SoFi Select 500, which was a $10 when we launched it ETF, very accessible and also very affordable from a fee standpoint. We also introduced SoFi Social 50 Index, which is based on members' holdings and has 12.5% weighting in some names like Tesla. So you have broader broader diversification than just owning single point names.
Anthony, Julia Borston here. I know you mentioned you bring in all of these first-time traders, first-time investors, and you want to introduce them to the other products in your portfolio. Obviously, you started off with student loans and mortgages. I know you've just filed an application for a national bank charter. How does that fit in to wanting to offer your customers a range of different services?
Yeah, being a national bank would really be critical strategically. Our company's ready for that next important step and responsibility. And I'm really proud of the progress we've made over the last 2.5 years to be in a position to make that application. And we're looking forward to working with the OCC, the FDIC, and the Federal Reserve on meeting their standards. We're already regulated in 50 states for lending. We already operate as a company that is safeguarding our members' interest and putting their interests first. So we won't be new to regulation, but it will allow us to be regulated by 3 entities instead of 50 different states. It will meaningfully lower our cost of funding loans. What does that mean for our members and our consumers? We can give them better prices. We can give them better products. We can serve more people in the United States to help them get their money right. We're focused on helping people achieve financial independence to realize their ambitions so they can own a house, they can have children, they can live where they want, they can have the career that they want. And so we have to get things right across borrowing, saving, spending, investing, and protecting. Having a national bank license will put us on the same playing field as big investment and retail banks and be able to offer products more broadly and at much, much lower cost and to more people. And so it's an important step, one we're ready for and excited about, and I couldn't be prouder of our team to have gotten us to this point.